Greetings, everybody. Happy holidays. This is Jeff Scott, and this is my top-down review for 12/20/2020. My email address, if you have questions or comments, is hgsidoc@gmail.com. And as you can see, I entitled today, Will Santa Stick Around Till Year End? As always, this is for educational purposes only. I am a doctor, not a broker. I am independent. I pay for the tools that I use, and I have nothing to sell you. Trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I used to do some teaching. Well, I guess you could argue I teach every week, but more formal teaching, and I called it Be Your Own Guru. And I talked about how I learned. I started with canceling with O'Neill, improved by Morales and Catcher, Ian Woodward, Mark Minervini, all of which you trained or learned from O'Neill. John Person, who has some great tools and education and really not how to build a list of stocks, but how to actually trade them. And then Sagar with his great tools and others on this list. And what I always tried to teach was learn from a lot of people, take the parts of each of what they teach you that you like, put it together for your own style, come up with your own things, and be your own guru. I own way too much software. I continue to buy stuff because I don't know how to say no. But what I really need is the indicator sets that I use in TradeStation and Thinkorswim. By the way, if I sound garbled today, I must have bit my tongue last night because I got a swollen tongue. Makes it tough to talk. But the John Person indicators, the Dr. K indicators, the Q tools, both in and outside of the Thinkorswim and TradeStation. For post-market analysis, it's Hgsi and EdgeRater. Again, the Q and Dr. K tools. As I say in yellow, not only do I have nothing to sell you, but I'm never paid by anybody when you buy something I suggest or use. Anytime a fee is offered to me, I say the same thing, which is to pass it on to the purchaser as a discount. Like others, I am an unpaid volunteer, and this is just education. Here's the website for HDSI. I'm not on the board, have no control. Get nothing if you buy it. Under my account, under free 30-day trial rather, is a free subscription offer for 30 days, no credit card needed. Under investing strategies, you'll see hundreds of videos, many by me. Stock patterns are cyclical, and every time it looks like we're going over, we start to take another leg up. Now, rather than being in a market that's been basing after a correction and starting to rocket out, this is much more like a market that is confused. Does it want to go higher or does it want to sell off? And it's so confused that it depends on what section of the market you're talking about. Last week, if you were a growth stock, you went higher. If you were a large Dow or S&P stock, not a growth stock, you probably went lower or didn't go as much. And that's kind of what we've been experiencing. The market is not dancing all in the same line. It's a story of market rotation rather than sell-off. Therefore, how you play this market probably depends on what you buy. Since I'm predominantly a growth stock investor, over the last 2 weeks, I've become much more long in my approach, trying to hit a crazy goal for the year, which I hit. But if this is also time to be careful because, as I started this by saying, will Santa stay to the end of the year? We have a correction coming. The correction could be Monday, highly unlikely considering there's just another vaccine approved and it looks like the Fed stimulus or government stimulus is coming. Could be the middle of January or February like last year. Might not be for 6 months, but one's coming. So you've got to be prepared and thinking not just for today, but for tomorrow. But right now for today, I'm very aggressive to the long side. If I look at the sectors on Friday, what I have here, starting where my arrowhead is, there's materials and energy, and you may or may not be able to read it. Doesn't matter what you say. I'm looking at trends. And the trend I see is everything looks pretty green except for utilities, which are defensive. Real estate, interest related, perhaps. Those are the weak ones, and also energy, with nothing is green with falling oil price, I guess. Let's look at the major markets. So here's the S&P futures. So first couple of things. When you see this little envelope or cloud up here with a price, and it's on the last day of a yearly chart, that tells you that's the highest price that we've had of the year. Now in the S&P 500, that's an all-time high, not just annual price. If I look over here, is the low of the year, and this came in, no shocker, in March 23rd when the market bottomed. I played with some games here because as I look at this S&P futures, we are struggling with this trend line, which is right here, struggling to break above it. We've failed at it multiple times. And we're also in the 23%, 23.6% fib retracement level. So this is an area where I'm not surprised that we're struggling with. Can we get through? It'll take a bit of a push. Frankly, I think we're okay if we go sideways for a while and then make the push. If we look at the NASDAQ futures, same thing on the bubble. At closed at all-time highs, and also, looks like at all-time, either at or near all-time highs. I'm not sure which closed. Let's see. Friday close was 12,748.50, and Thursday close was 12,753. So it looks like Thursday's close, yeah, of course it was down, was a little bit higher on the NASDAQ. So the NASDAQ closing high was on the prior day, and I think the S&P made it positive by a few pennies on Friday. But the NASDAQ, I mean, you got the 17 above the 50, above the 200. Everything looks great. Just when is it too great? And when are you going to get a correction based upon time or extension? Look at the Dow futures. Make this look like the others. The high of the year actually was last week at some point. But we're closed right up near that high, just under the prior high. And the Dow was actually, well, the futures were up after the market closed a lot on Friday, up 74 points. The market had a pretty ferocious comeback late in the day on Friday as well. The Russell futures, all-time high. Boy, broken record. I mean, how can we be bearish at all-time highs? I mean, we could be bearish anytime we want. We could be bearish because it's going to come down sometime. And the reason why you have all-time highs in the past is because they came down after that. But all we know is we're at an all-time high today, and we have to look for evidence underneath that something is changing. And here is the VIX. The VIX tried to rally this week. I actually made some money on a VXX long position, but it really came right back down. At some point, the VIX is going to rally. It hasn't yet, or significantly yet. And the dollar, which we're in a daily chart, trying to put in a stand here inside day on Friday. We'll see if the dollar is able to find its footing. So when I look at the daily charts, I see a very strong market. Now, I made a comment about a rapid recovery late Friday. This is at 3:30. So all these arrows came in about 3:30. Those are John Person buy signals. And look at the last 30 minutes of the S&P, the Dow, the Russell, S&P, the NASDAQ, the Russell, and the Dow. Pretty impressive rally any way you look at it. Really made the indexes in my portfolio look better at the close. All right. On the weekly charts, this is interesting to me, or interesting or concerning. is that here's that trend line which showed up on the daily charts as well. And we are right up against the trend line. Now, every time we've hit this trend line here, 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 almost here, and up here, we've seemed to stutter and pull back. No one says we're going to pull back. This broader base here is the megaphone. I have no expectation that we're ever going to retest the bottom of this megaphone. But I'm pointing this out because I've been sounding pretty bullish. But we're at the peak of this trend line. And you can see how the NASDAQ, the Dow futures, look how the Russell almost going vertical over the last number of weeks. The VIX going sideways and the dollar just getting weaker. Now, I like to look at things underneath and try to get a sense of how they may impact on the market. Can't see it very well. We have an upward channel on both of these, and the rates drifted up on both the 10-year and the 30-year. Rising rates are good for banks, especially regionals and insurers. There was news that came in after close on Friday, which probably was the reason the futures jumped, that banks can now buy back stock. And immediately, JP Morgan and others started making announcements. AD lines. On the left are the mid caps, small and mid caps. On the right are the large caps. In the red is their prospective moving ETF, the IWM on the left and the IWB in orange on the right. In white is the AD line for that index. You are at new highs, all-time highs on both index and price. Not a divergence, and not a signal that it's coming down. If you look at the NYSE and you look at all these different ETFs, the diamonds, the Qs, the spiders, the IWM, and the transports tick down a little bit, but the rest are all sitting here at all-time highs. What came down this week and what's been trending down over the last couple of months is TLT, as rates have started to rise. Now, another way of measuring breadth might be stocks above the 200 and above the 40, and we're high on both of them. We're the highest we've been in probably 5 years on the stocks above the 200, and we're not at the highest on above the 40, but we're in areas where stocks have historically ran into some resistance. The T2121 in IntelliChart or Warden is right below a level where we typically see reversals. Now, as you can see this year, we've been up and down in that same level, and the market continues to go higher. So these are just signals that we're getting overheated. They're not sell signals. The daily McClellan, and clearly you had some bearish divergence here on the summation index. And what happened? We broke above that trend line over the last couple of weeks. We are bouncing on the zero line, and if we come up from here, do we have a zero line reject? We might. Two signals that could say the market could be going higher, similar on the weekly. The buckets. This is an edge rater sheet where I pick my desired index. As you can see, it's the S&P 1500. I hit a button, and then it tells me how many stocks are above or below their midline. That is a bullish but not scary number. And then how many are in each bucket, with this being above the Bollinger Bands, less than 0 below, and dividing 0 to 110 deciles. Strong but not reversal. I mean, reversal would be 30-40% or above the top of the band. HINDY free zone. On first look, I noticed nothing in the Hindenburg column. Now's the time we're going to start to look for them, because as we get to all-time new highs, this is when Hindenburgs may occur. For those that are new, a Hindenburg omen is a combination of new highs, new lows above 2.2%, rising moving average, McClellan, less than 0, and the new highs cannot be more than 2 times the new lows. The sense of a Hindenburg is that it occurs when the pros sense the market is topping and the amateurs, meaning the small investors like us, are buying because we don't want to miss out. And you see a ferocious market with new highs and new lows. And historically, the Hindenburg Omen has preceded every major market sell-off, probably in the last century, or at least last 50 years. But 1 out of 4 Hindis are considered strong signals. But even with a Hindi occurring spurious, it's not unusual to see a small pullback in the market. But no big-time correction has occurred without triggering the Hindenburg Omen. Now, you'll notice in green here, 12.4% of the stocks in the NASDAQ are at new highs. 10.88% of the stocks in the NYSE are at new highs. I believe these are 52-week highs, by the way. As you look in the NASDAQ column, I see a 12.2%. Somewhere I saw a 12.2. Here on November 9th, and right away it dropped down, telling me that there was some weakness that came in. I see some 10s and 11s, they dropped down. So we've had 2 days above 12. And then if I look over here, I have a 10, here was a 12, here was a 15. And notice that the number of new highs comes down the next day. So that means that you probably are getting small periods of time where you're getting a bit extended. So I asked myself the question, are these really abnormal days? Are we extended? So the NASDAQ, this day on Friday, which was 12/18 at 12.42, and then here is Thursday at 12.54, it's like the 102nd highest extension of new highs in the last 20 years to date. That's impressive, but as you can see, it can get higher. On the NYSE, not impressive at all. It's number 585 over the last 20 years. So we're extended, but we're not to the point where it can't get any more extended. Market tone, pretty much bullish. A little bit of yellow creeping in. This was a week for growth, which, you know, that means I made money because I'm a growth guy. This is a report from EdgeRater. It's based upon a template of data that I stored a week ago. And it asked the question, based upon that data, how did things do over the next week? ERG, for people that are IBD and MarketSmith followers, is EPS rank 0 to 99, relative strength rank 0 to 99, and group rank 0 to 99 added together. So the most you could get is 297. On the x-axis is plotted the ERG. On the y is plotted the percent move. Now, you'll notice over here is the number of stocks at each ERG. I ignore usually the first 3 bullets. Why? Because there's very few stocks on both sides. So if you take that away, you've had clearly a move from either break even or negative on the low ERG, as much as plus 8% on the high ERG. When ERG wins, I make money. EPS rank showed that the highest EPS rank, the best return on the week, the highest relative strength rank, the highest return on the week. Group rank over 1 week did not seem to matter. Neither did prior week's accumulation distribution. The prior week was strange when you look at what was performing. Now, if growth wins, I know I had a good week. So the S&P on the week was up 0.79%, measured from Friday close to Friday close, cash index, not a future. If I took all my holdings and ignored the fact that I have options, my holdings were up 4% on the week. Filtered buys were up 3.62. My overall buy watch was up 6.73. That compares very favorably and similarly to the IBD list of the MarketSmith 250, 50, and the weekend review, the 85-85, which were up over 4 to 4.5%, 4.66%, 4.69%. So a very strong week for growth. It's interesting when you look at some of the groups that were down, the viable gap ups on Friday were actually down. The best stocks under $15 were not down, but they well underperformed. Things you'd expect to be down, squeezing potential, PSA reversals to the downside were down. Special situations, which would be beaten down stocks with big dividends, were down. And big volume in an uptrend were actually down a lot on the week. So there's a lot of rotation going on still. What about the indexes? And the FANG index was up. FNGU, a 3X ETF, was up 38%, was up 16%. Leading the week, you can see silver was up 7.6, oil was up 4.82, gold miners were up 4.28. The laggards were the TLT, the dollar, and transports. If you were a growth stock investor, you made money this week. Sector strength, getting kind of ugly down here where that just some road. I hate when that happens, my bad. Where you have some rotation going on in the sectors. No surprise, you got real estate, you got utilities, industries were yellow, financials have been yellow, but boy, over here, and staples have been yellow, as have materials. So a softer sector strength than it was back up here. If I look at Q's edge tool and I look over a month, you could see the pie of sectors, industries, groups, and stocks very bullish over the last month. On Friday, not so bullish. And even with the recovery into the end, most sectors were down. The majority of industry groups were down, and stocks were down 62%. Over the 5 days, kind of the opposite. I would consider this a week down, and this is a week up, and that's a much stronger up. If I look at the sector mix, interestingly, over 5 days, that would be here where it's a week up. We had 7 out of 11. Over 10 days, 7 out of 11 sectors were up. And over the month, everything was up except for utilities. Down here, you could see 1 week, 2 week, 1 month. Energy was down here, but look at the strength on energy, IT, discretionary materials over the last 1 month. Very strong market if you're in the right industry groups. Now on Friday, using Q, I ranked the sectors, and you could see that over the time periods are above here. IT has been incredibly strong. Healthcare, which had rotated out, now seems to be coming back in over the last month. Industrials have also improved. And the laggards at real estate, energy, despite a flare over here, and utilities and financials. Financials may turn around this week. If I looked at healthcare and information technology, here are the industry groups that make up those two sectors, and you can see which ones come up to the top. And then if I take the top 5, hit the peers, I bring up a list of stocks, and then if I want the ones that are undervalued and with earnings per share growth, these are some of the stocks that came up, and then I looked at most of those as part of my review. Canaries in the coal mine, since FNGU was strong, it's a pretty good bet that the canaries are up. And here they are, all-time highs on the canaries, riding Santa's coattails. Know your news and earnings. Looking at news, last week was a big one with the Fed and others. Nothing on Monday. Tuesday, some industrial production and capacity. Retail sales on Wednesday. Be interesting to see what people are talking about. Never mind, last week. Let me pull this and let me replace that. All right, Monday, Chicago Fed. Tuesday, big week. GDP, consumer confidence, existing home sales. Big day of the week, rather. On Wednesday, another big day with some durable goods, jobless claims, new home sales. Thursday, a lot of announcements on some Fed auctions. Friday, as you'd expect with markets closed, nothing. So not a light week at all, despite the holiday. Last week was the last full week of the trading calendar. From an earnings perspective on this coming week, we can look at this sheet here. And you've got some, but very few. Now, if you own Paychex, CarMax, Vince, FactSet, you need to be careful because it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Thoughts. We sold off Friday, although there was a substantial rally into the close. On the week, the markets were up, led by the NASDAQ at 3.1 and the Russell at 2.6% respectively. The Fed continued to stress the need for fiscal stimuli while assuring the markets that they have no plans to raise interest rates and see no inflation in the near future. News flows will continue to challenge the market. At least what hit my phone a short while ago was that they reached an agreement. We'll see if that's true. That plus the bank news, plus the vaccine news could lead to a interesting rally, at least to start the week. They passed a stopgap bill to fund the government, so that needs to be taken care of as well. COVID will dominate the airwaves. Cases are up. I'm just picking on myself. I didn't like how I formatted that. Hold on a second. Not that I'll ever look at this again, but there you go. Cases were up and hospitalizations were up on COVID. Varied state-driven closures that could spook the economy. That's why we need stimulus. The Moderna vaccine was approved late Friday. Will hit the market this week. So, we are either at the beginning of the end or the end of the beginning of this pandemic. Either way, it's moving forward, which is good. Underneath indices, the markets continue to work off some of the overbought conditions with rotation. As I showed you, this week was growth, which helped my portfolio. Real money account began the year 1.4 million, now is up 215%, which is over 3 million in profits. I took profits going into options. I lightened up some of my big positions, closing some laggards and rolling others up and out. Santa may keep this market from rolling over until after New Year's. We will correct. No one, including myself, knows when that's happening. So let's go in and take a look at what we just to prove that I'm not full of something. And I think it's important, although I'm not sure I'm going to be as open with you next year, that if you're listening to somebody, that they at least prove some track record. And here's my favorite part about my account. There's my P&L year to date. I've shown you this probably once a month for a while. That's 3 billion and change. Notice that my net liquidity in day trades is only 3.2 million and change. What does that mean? It means I take money off the table. I don't leave my money in. I take it, I buy things, I move it to other accounts. I bought a house, I've got boats. The point is, I'm playing with a lot of the bank's money here. And I pay my taxes, by the way, and I put money away for retirement. So this is my trading account, but it's money that I'm constantly pulling out to pay for my living and to pay for my future living. And a lot of the stocks that I've talked about are the stocks you'll see here, but more about that. Now let's take a look at TradeStation, and I like looking at the indexes. Tell you a little story about, I get a lot of calls about what computers, what processors to use. I've always been an Intel boy. Every computer I ever had was an Intel computer. Maybe it was snobbery, stupidity, but part of the problem is most of the computers that I buy are gaming machines. And there are very few high-end gaming laptops that are AMD. Why a gaming machine? No, I haven't played a game in 20 years. Gaming machines, because they have good processors, lots of memory, video cards, and large SSDs, and they're designed to play fast. Exactly what I want for trading. I actually bought a cheapie Ryzen 9 AMD notebook. I pimped it out. I got it pushed up to 4 terabytes on the SSD. It's got a low-end NVIDIA discrete chip, a 2060, and a Ryzen 9 4800, I think. It is the fastest computer I have, and I've got Intel 10th and 11th and 9th generations. I got i10s, I got i9s, I got i7s, and that cheap little AMD computer runs circles around them. And the funniest thing about that computer, I run scans, and I'm always joking with John Person how TradeStation's broken. Whenever I run my scans, I get a blue screen on the or a white screen on TradeStation. I have to turn it off, turn it on, and do it again. I can't run them all at the same time. And he basically laughs at me and tells me it's because I have too many things I'm running. Well, he's right. You should see my scans and what I'm doing with those scans. Well, it turns out that little AMD sucker, I can't break it no matter what I do. Um, it's interesting. I actually am buying building a tower with a 5950 AMD, which is a top of the line processor, just to see if it can make my scans go faster. Back to the story here. Futures went up after hours. So even though they may have closed the market or been negative for most of the market, I think the cash market still ended up negative. It's been 2 days. I feel like it's been a long time since I looked at it. Where's CNBC? Right here. Look at the implied open on the futures. 189 on the Dow, 8 on the NASDAQ, 15 on the S&P. Why is that? It's because of because of the banks, and the banks being given an opportunity and a stimulus coming. And you can see the markets were down at the end of the day. So the fact that they're green is really looking forward. If I look at the E-minis, I have a green bar, which is good. I am still in a buy signal, which is good. I'm in a buy signal weekly and monthly, which is good. I got these red dots that tell me I'm getting tired, a little bit of MACD divergence. You can notice higher highs, and on the MACD histogram here, lower highs. They can go on like that for a while. My weekly bongo is green, and I'm at 78%. I've come off of the high jump zone. So the E-mini is up a lot, can go higher. If I look at the Dow futures, and again, they've got some element of Monday, or not Monday, but after hours movement in them. But blue, which is, a neutral, green is bullish, red is bearish. Person buy signal in play, weekly buy, monthly buy, 70% bongo green. I can see this going higher. If I look at the Russell, riding the envelope, which these things can do. The red dots on the daily tell me that this market's probably getting tired. And look at the MACD, can barely turn positive with these new highs. It's at 94% on the high jump, and if I look back during this week, it was at 100 yesterday. So it's extended the most so far. And then lastly, the NASDAQ, which most closely reflects what I do. The NASDAQ looks like the others, red dots, high jump is okay. So I don't see anything here that says the market has to fall on Monday. And again, the futures sort of buoy, whatever the word would be, the emotions there. The dollar, a little bit of strength on Friday. Is a strength in a downtrend like we've seen before, and it's going lower. There's a lot of pundits that say so. We've been printing a lot of cash. Look at the green positive convergence on the weekly dollar with the MACD getting close to neutral despite lower lows. That might be signaling a reversal is coming to the upside on the dollar. All right, let's take a look at Hgsi. And let's open up Major Markets Plus. Yours may be different depending upon when you put Ron Brown's in, and whether or not you added the things I added. He added, let's see if I can even find it, ARK. Let's see if I can find any ETFs. This is such a great program, in my opinion, because of the way it maintains everything for you. Um, how it automatically calculates splits, gives you a dictionary up here of all the different industry groups, all the ETFs, the components of ETFs, components of industry. Let me kill this thing here. And then it does things here in the smart groups where it has pre-planned scans that it runs every day, every time you do an update. Under the custom groups, there's one, my friend Kathy, who's now up over 50% a year, and she's never really traded before this year, although I think she's played around. Um, and she's got it so she doesn't beat the NASDAQ by 10%. She feels like she hasn't had a good day. I'm not going to comment on that one, but that just shows you how this market has been. She trades off this list, the top 50, the most recent top 50 stocks on a daily basis. And there are great stocks here, many of which I own as well. So there's great stuff in this designer if you want to find ways to make your life easier and find great stocks to buy. So we're going to work in Major Markets Plus here. I've added to my Major Markets Plus a few things. I've added the 50, which is the IBD 50 ETF. So it's an actively managed ETF, reflecting the holdings of the IBD 50. There's a IBD breakout, which I still don't fully understand what's in it. And then I added the FANGs, and the ARK is one of these ETFs that's buying these great growth stocks, and another way of looking at it. I'm doing the top-down analysis. I'm ranking by raw combo, and the winners on the week were biotech, the composite, the IBD 50. The losers were the Dow Utilities Volatility, Treasuries, Dollar, and then the big stock indexes. How do you think you did this week if you're a growth stock investor? You should have done great because this is your kind of week. Let's open up the S&P 500 and we'll go from there and get some thoughts about the market that we might see this coming week. Again, here we're going to be using the cash indexes, not the futures. Yeah, it's too high. Let me bring this down a little bit. Someday, maybe Hgsi can have a desktop feature like TradeStation does and everybody else, so that I can create the setup that I want with my charts, and that every time I open it up, it'll open to that. Now, yes, I know that that already kind of sort of happens, but not really. And the kind of sort of happens is if I was to close HGSI with these things here open, that when I opened HGSI, they would open these windows up. But if I went and I updated HGSI, I'd have to rebuild them again. So it's not really functionality yet. I would find that to be extremely time saving. I wouldn't just have to do what I just took me a minute to do, but there's probably more important features for some of us than that. All right, here's the S&P 500. Here's the 127.2% fib retracement, and notice how we are just running right into that. It's interesting. Does that hold any value? If I look at the last several trading days, we have just been running up to this thing and failing. So this is clearly short-term resistance right now. It's right up here. A break above that, more new highs, obviously. Where is short-term support? Well, this is the top, the prior top. That's way down here. The beauty here is I got the 8-day exponential, the 17-day simple. I've got a PSAR dot, a chandelier stop, a 50-day moving average. So we have a lot of support underneath. So I don't think this market does a one-day drop to revisit the 200. So even if you saw weakness, There's a lot of things to delay the fall. This is a very well-supported market. The problem is we got to get above this area of resistance. We're not going to go sideways forever. The longer we go sideways, I suspect there's a risk that we're going to drop. Um, Sideways churning rotation, you can still make money, as I showed you this week on both my personal and the group performance report. So bullish, but I'd like to see us break above that top to really feel positive. The Dow Jones Industrial Average, very similar. I didn't look at where that extension is. We're probably not at that extension yet. But we are really stalling here after just a huge run up off the bottoms. Again, took out the prior highs, and frankly, we're kind of stalling at those highs from earlier in the year. We're higher than it, but not by much. If I look at the Russell 2000, this has been the recent champ, and you can see a rip-roaring move here. Rip-roaring move. 3 kahunas in 5 days. I don't care if it's a stock or it's an index. That's a big move occurring right with the Eureka, showing strength in the market. Wow, this was a well telegraphed huge move. What's not to love? All right, you had a red day on Friday, big deal. You're still in a huge uptrend, supported by the moving averages, the PSAR dot, and the chandelier stop. It won't go to the moon. Eventually, it's going to fall, but it hasn't fallen yet. And if we look at how it compares to the prior highs, here's your fib retracements. Sort of. I'm not the best at playing with these things. And you could see that this line here is the prior high, and you can't see it, but this line here is the 127 replacement, and we blew through the 127 replacement, and now we're up to the next level of retracement right here. The Russell is incredibly strong. And then the NASDAQ, also super strong. So how can you be bearish on the markets? You can only be bearish on the markets if you take the ploy, they can't go up forever and we're due a correction. But you might be saying that for a few more weeks. Semiconductors, kind of showing you the impact of market rotation. They've come down a little bit. Not a lot, but they've come off their highs. Okay, don't look bad here. They're still above the 817 and so on and so forth, but they've given up a little steam. Biotech, on the other hand, super strong. And as I've mentioned before, because I have NDAs with a lot of companies, I play a lot of biotech by owning LABU, which has been great as well. So biotech sort of broke out in this range here, and it's had a nice little run. Alexion getting taken over did not hurt biotech. The NASDAQ, the IBD 50 fund, looks like the NASDAQ breaking out to new highs. If I look at the breakouts, they look like they hit a wall here a little bit, reversed on Friday, sort of a red candle high. Not exactly sure why it didn't paint as a red candle high. I guess maybe the volume. It still looks like a red candle high to me. And then the FANG stocks, FNGS, all-time highs. Dollar, toilet, although it did rebound a little bit this week. At some point, the dollar is going to recover. Too early for me to say that that's happening now. Same thing with the VIX, down in the bottoms, almost to the point of where it used to be basing. Gold, weak dollar, gold should be flying, right? Well, not really. Gold popped up above the 50, which is an improvement, but it's still in a downtrend after the recent highs. Silver, more use than gold, looks better. A lot of talk about is Bitcoin replacing gold as a risk tool, mitigator. It's a lot easier to store Bitcoin than it is to store gold. And then gold miners ran into their 50 and stopped. So strong markets, defensive things look a little weaker, and that's probably part of what's not helping gold as well. So next I'll close those two down. I didn't need to close that. I'll leave that one open. Let's go to F7, which are industry groups. Hit warehouse view, they pop over here. I have 175 groups. 2-day up, I have 50. 2-day down, I have 40. So bias to the bulls. 5-day up, 61. 5-day down, 34. Bias to the bulls. So the bulls are showing some strength. Some of these things that have bounced off the bottoms, I'll call my T.G. Watkins plays. The REITs, the airlines, the explorations, the mass merchants. Some of these weakened this week, but many of them are just so far off the lows, they've had great performance. And I know he's had performances as good or better than mine, which pretty impressive either way. 2-day ups. What I typically do is look at those industry groups in the top 10 and the stocks in those industry groups that are outperforming the index. So let's right click to change to industry group, left click, list the stocks in that industry group, and let's start with Tesla. All right, so let me open up a new window. Perfect. I use a little bit cleaner view now. Where do I put it? Views all over the place. Okay, I took out the daily bongo. I wasn't using it. So I've got the Hindenburgs, the weekly bongo. I've got the high jump. It's not the new high jump, is it? So let me customize that with the right high jump. That's not what I'm going to open up my view. Yep, it is the high jump. Never mind, that is the high low. That is the new one. Yep. All right, so I got the new high jump oscillator. Then I got Bible gap up, squeeze, mobile breakouts. I've got person buy signals here, and then a ribbon, market catcher, pocket pivots, eurekas and phoenixes, and kahunas. All right. Note the volume is going to be big on certain things like Tesla from Friday because Tesla got added to the S&P for Monday. So Tesla, I'll say this a lot today. It's great to be an owner of Tesla here. I'm not sure I'd be buying it. It's had a big run. Who knows what's going to happen? Everybody thinks it goes up because it's in the S&P 500. But how much higher can it go before there's a correction? And since so many people have already been bought in, is it going to sell off? It goes with the market, but this thing's extended. I wouldn't touch it here. This is what I want you to pay attention to. I want you to pay attention to stocks that get close to the 50, that have squeezes, so they're going sideways. They have momentum. Here's a mobile breakout. Here the next day was a new John Person buy signal. Here is a pocket pivot. Here is a kahuna. And more importantly, that green is on the market. The market was taking off there. So this is a very positive time in the market. And Tesla has had a nice move. I don't chase. All right, so why are you doing that to me? Oh, because I did that. The next one is NEO. Now, NEO, I ran up. I had it here. I'm back in it. NEO looks interesting here. You could certainly argue that the reason why I have a chandelier stop there is to not buy it until I break above that stop. So the chandelier here is sitting at 48.35. So I probably would not be buying NEO again until it broke 48.35. It closed at 46.72. Why? Because that's going to potentially give some resistance to it. And that's just how I trade. I don't like to buy it right below the chandelier. I'd rather wait till it breaks above that chandelier stop. So NEO looks interesting there. The rest are below, so I don't look at them. Entertainment Content Index. Nothing is above the index. I'll look at these just because they're here. Billy, kind of like Tesla. That was when to get interesting. It's too far gone. Good to own, probably not good to buy. MSG Networks. Kind of a combination. It's been a stock in a huge downtrend. It's broken up. It's basically hoping that things are going to get back to normal in its arenas and other places and on its network. Huge volume on Friday. I might want to understand why. Yeah, just not my kind of stock. Renewable energy, boy, I've got a bunch of these. Plug Power, I have this one. Why not? Look at this. I mean, you had 2 days, the next day, and then you had this day. You had four kahunas and three kahunas in 4 days. That is as strong a buy signal as I ever see. Here you also had a mobile breakout. You had a person buy signal off the 50. Would I buy it up here? No, I lightened up. Lightened up means either I covered my options, sold some of my position. If I had a Scott synthetic with a short put spread, I sold that. And maybe I could have even sold a call above it to take some premium. But I did something with it on Friday. Beautiful run off that spot, but I buy it here. Okay. Fuel cell. I bought some of this earlier in the week. I like this story here. Not much on the fundamentals, totally under demand, huge industry group strength. And, I didn't see it here because it really hadn't done much. Frankly, it showed up on Sager scans down here, and it was a $4 stock, $3 stock that I don't usually buy. But I like this here. I think this one goes higher. This is Fuel Cell, FCEL. It is a speculative play. Jinx Solar ran up, has gone sideways, ran into that chandelier and failed. It's far away from closing price to that chandelier. This is a possibility if you want to play the solar. This one just continues, is the index, I'm sorry. Canadian Solar, higher in the, this looks better to me than JKS, under demand. Solar Edge, we talked about this, I think 2 weeks ago. It's had a nice run off its pullback. Sun Power looks good. Ballard Power, I bought again on Friday. DACO, it had looked good early Friday, then it closed with a shooting star. That's often a reversal signal. These things are getting tired. Enphase, we talked about a couple weeks ago. We talked about Friday about a kahuna off the 17 with a mobile breakout from a squeeze, and that gave a 30-point move in the week. Nice position in that. First Solar. So these have been big dogs. I own a bunch of them, and I started lightening up. I started lightening up on everything, and I defined what lightening up was with the last few minutes ago. Application software. Adobe Systems is buyable. One of the few stocks that I'm going to show you that looks buyable. Just had a mobile breakout, new person buy. It's got a pocket pivot. It's breaking above the moving averages. It's definitely not extended. I think this is an interesting stock. It's expensive. Earnings are not out until March. Digital Turbine. I hope you've been playing this one. Oh, I love this stock. This was my biggest position. I had a lot. I sold, I think, 5,000 or 10,000 shares on Friday just because I still have a lot left. You can see the earnings per share growth. If you've been watching me for a while, you know I love earnings per share. I could care less about that PE when the earnings per share growth is bigger. You can see it's under demand. And every time it pulls back to the 50, you buy this puppy. You don't buy it here. It's good to hold here. I wouldn't be out buying it. Now, is it going to go higher? Probably, but it's a high-risk buy. MongoDB, another story. It would be good to hold and not to buy. You're getting the theme this week. Lots of great-looking stocks, but not a lot of great stocks at buy points. Take two. Go back 3 weeks ago. This was a very intriguing area for this stock. Mobile breakout from a squeeze, a pocket pivot, and a John person buy. And that was on a Friday. So we talked about it on that weekend. I've been burned on the game stock, so I didn't chase it, and it's had a nice little pop, 20% move in a couple weeks. Same with Activision Blizzard. I mean, this is it. I mean, I have to look below. That is the candle that I like to be buying on. But it's a gaming stock, and I didn't buy. NetEase, not as clean as the others, but if you're looking for a stock at a buy point, you've got a new person buy on Thursday. You've got a pocket pivot. You've got a kahuna on Friday. You've got some earnings coming in. NetEase. Now, one of the problems with the stocks that haven't broken out yet is they're laggards. Salesforce is in acquisition phase. Infrastructure software. Some weeks you just feel like you're really smart, and sometimes it's got nothing to do with you. It's got to do with some Russian hackers. Now, I don't own FireEye. FireEye was a whipsaw because originally FireEye sold off with that Russian hack of SolarWinds. But it turns out you don't want to use the name of your company followed by 1234 as your password. As it's turned out that it's SolarWinds that was the problem and not FireEye. FireEye, like other security stocks, and net security stocks, has rallied. I did not capture that one. I did capture this one. I've been in CrowdStrike since about 70. If you go back and look, I've been probably in this area here, which would have been in April. CrowdStrike just went crazy. I rolled up my options, took some of my position off because this is a big move and probably not sustainable, but maybe not done. Palo Alto looks the same. CyberArk looks the same. Oracle looks good. They're all great stocks if you're in them. They're hard to buy in here. Qualies, Proofpoint. All it takes is a event to wake up the security stocks. ServiceNow. I hope she's still holding it. I remember my neighbor, I told her to buy it, and and I think she holds things forever that I tell her to buy. This thing just goes crazy. It's hard to own because these are big swings, but boy, what a beautiful uptrend now moving up. ServiceNow, but when I buy it here, it's too expensive. I'm looking for things I can buy right now. Nope, not that exciting. So infrastructure software has been huge this week. Consumer electronics, Roku. I am probably the dumbest person in the world. I have 4 Rokus. That's not why I'm dumb. They're like $79 each. I don't pay any money to Roku on a regular basis. I haven't bought a new Roku in 4 years. The next Roku comes out, I'll buy it if it's an 8K or if it's an improvement. How do they make new money? Eventually, we're all going to have Rokus. And by the way, Rokus are built in some of my TVs, which is good for them short term. I've got Apple TV. I don't need a Roku. I don't get it, but every time something new shows up as an app in the Roku store, which is a free app, they must be getting some of the streaming fees, I guess. Roku goes to the moon. I don't understand it. I don't buy it. Hgsi. I don't need to say anything, do I? Global breakout from a squeeze sitting on the 50. The next day it has a person pivot, a person PPS buy, and a kahuna. The bongo switches to green and the stock pops. Too late to buy it. Microvision. There are a lot of stocks that look great, just not a lot of stocks that look great to buy right now. Bitcoin. Oh, my son's a millionaire now. Well, he wishes. Unfortunately, well, he has 6 Bitcoins, I think. It's still more Bitcoins than I have. So God bless him. Bitcoin's on a major move. I don't know how to play it. This is one of the ways to play it. I think there might be other ETNs or ETFs. This one, when I looked at it before, their fees were not cheap, and there was a premium tied to the value of the Bitcoin. So that's one way to play it. Laser, what a move and what a move down. I think there was some competitive concerns when it ran after it peaked. Tough stock pattern to play. tattooed chef. Yeah. Then you get a bunch of SPACs, electrical power equipment. We've talked about this one several times, and it continues to go up. I guess, well, look at the demand, 41%. How much of this is Robinhood's, and how much of this is real thinking there's going to need to be an infrastructure for charging for all the EVs? I mean, Volkswagen sent an email out. I bought my daughter a Volkswagen Touareg or something 5, 6 years ago, and I got an email yesterday that they got a new EV, and it's cute. And she needs a new car eventually, so I basically went and bought or put a deposit on one to buy her a car. Um, Everybody's going to have EVs; they're going to have a place to fill them up. So maybe Blink makes sense. I've never understood it, but I've talked about it a lot, haven't I? International, what is that? Internet, oh, internet stocks. Match Group, big business, despite the fact you can't really hook up with COVID. I guess that's not true. Being a Puritan who's in his 60s there. Um, there's been good places to buy this stock all along. I've not bought it. That was clearly a mistake because this would have been the opportune point. But it's too late to buy it now, in my opinion. Coupa broke out. Zscaler, we talked about it here, somewhere down here. Shopify, I've made a lot of money on this stock, but very short-term plays. If you want to be bullish, it's gone sideways for a long time and it's breaking out here. If you want to be bearish, and I'm going to be bearish on it, although that's probably the wrong play. If I want to be bearish, I can say, nah. If I want to be bearish, I go like this. If I want to be bearish, I say, nah, I'm living in a box. And when I break out of this box, I'm interested. I'm close. Right? I could have been more nice, and I could have said that the box was here and that we're breaking out of the box here. A breakout above this level has got to be bullish. I mean, we broke out of the multi-month high on Friday, Thursday and Friday. I think it's worth watching. This is the e-digital for those that don't work through Amazon, the digital retailing if you don't go through Amazon. Nutanix, don't know much about it. Just looking for stocks that we can buy. Trade Desk, I mean, another monster of the year. Every time I say I can't buy because it's too expensive, it gets more expensive. But you know what? Even a stock that if you look at this chart here in the weekly from April to now, it's gone up from 180 to 972. You had opportunities to buy it here in April. We had opportunities to get back into it here, potentially back here. Too far extended for me, but it's going to go higher. I can guarantee it. Almost. I don't guarantee anything. This is stocks, not my day job. So that was a view showing you a lot of really strong stocks that are for the most part extended. I did find some stocks that I am interested in watching this week. So again, for those that haven't been here before, here's a list of 49 stocks that I found to be, in one way or another, attractive. Now, before I go on to that, I'm going to do something very quickly. And I'm going to import last week's list because we looked at something. I want to go back and review it. So import groups. And I want to go to last week, which was the 13th. All right, so that's going to import the groups from the 13th. How do I follow 49 stocks? That's impossible. I agree, that is impossible. So this is what I'm going to do. I'm going to go here. I'm going to go to Market Watch. I'm going to go to, that was last week's buy watch list, and you can just look at the list and see that, a third of them were negative. the biggest negative was down minus 8.5% was an energy play. The rest were positive, plus 11%, 14.4, 17.5, 19.87, 21.6, 26.7, 27.3, 30.48, 31.9, 35% return on the week. Not too shabby, eh? I bought a bunch of those as the week went on. Some I already had. So let's import, select file. These are the stocks that made my buy watch list for this week. And I'm going to import them into Thinkorswim. It'll take a second or two. And then now I have some of my favorite technical analysis scans, and I could be looking for stocks to have a pattern. I have, this is a very accurate buy-sell signal, kahunas, HCDs, LCDs, pocket pivots, Bible gap ups, looking for potential divergences, Dr. K's long and short stochastics, Dr. K's RSI, and others that I can look at on a moment-to-moment basis to understand how my stocks are going. So I will particularly look at that, and I look for this 1.0, and that will get me to look at the charts. I also dump them into TradeStation, and TradeStation has a radar screen, and I've got different radar screens and different computers. This one has a lot of both Dr. K stuff with seasonality and the RSI, but also Sagar stuff. So I'm able to monitor a large list of stocks during the week. So last week, I went and pointed out specifically my pullbacks in an uptrend and told you that these are some of my favorite stocks. So these are the ones that I picked last weekend. And these are the ones specifically I wanted to review with you because I thought they were at good buy points. They did not all have a good week, okay? If I look at 5 days, I got 1, 2, 3, 4, I got two zero changes, 4 negatives, and 1, 2, 3, 4, 5, 6, 7 positives. But the big point I want to point out is the big ones were positive. And let's look at why I like these stocks. Calyx. If you think I'm just making this up, go back and look at last week's video. Here is Monday. This is the perfect stock. It's the perfect stock for my buy list. Why is it on my buy list? It's on my buy list on this day right here on Friday. It's on my buy list because it's in an uptrend. It's pulled back on Thursday to the 50 and had a kahuna and a mobile breakout from a squeeze. On Friday, it had a little inside day, and I'm thinking, pull back to the 50 in an uptrend with momentum, and I set a buy on this stock on Monday, and I think I bought options. I did a 25, 35 vertical. Let's see how much I paid for this. Oh, it's only going to give me the one, huh? Okay, hold on a second. All right, so I bought a call at $25 call. Let's go back to the stock price. So here's 25, which is right where it's breaking out. It opened on Friday, the high of the day was 25.04. So I put a stop to kick in if it was above 25.10. I bought a $25 call. Let's go back here. I bought a $25 call for $3.71, expiring on January 21st. $3.71. I sold a 34 call for $1.05. So I paid $2.67 for this spread. The most I can make is 9. So my profit would be $6.30 on a $2.60 or whatever it is spread. So that's a 200% return in 1 month. Multiply that by 12 on an annualized basis. That's a huge return. What's happened is, so this is what I bought them at. Here's the current prices. And I am up on this trade $13,000 in 1 week. How much did I invest in this trade? 260 times 5,000. 13,000. How much am I up? I've had 100% return in the trade in 5 trading days since I gave it to you. That's my kind of trade. Calyx. Second one on the list was renewable energy, REGI. I did not take this one. I'm kicking myself in the ass. I didn't take this one because I own Enphase and Solar Edge and Sunrun and Plug Power. I'm too exposed in this group. Why did I give this to you? Do I really need to tell you? I'm sitting on the 50. I had a mobile breakout from the squeeze, a new John Person buy signal. That's that right there, a pocket pivot and a kahuna. All right, so you would have bought it at sometime after the open, and you would have had a nice return. We're running from 62 up to 75. All right, what's the next one? Are my pullbacks ready to run? Enphase. Here's Friday. Mobile breakout from a squeeze. Person buy. Pocket pivot and kahuna. I was already in it, so I didn't buy more. And it moved from a close on Friday of, say, 140 to a close of 164, but a high of almost 170 on Friday. That's a pretty big 1 week move. Papa John International, I just couldn't buy this one. 6.6% on the week. But boy, it looked good, huh? 1, 2, 3, 4, 5. Here was the buy signal. Then here was the pullback to that on Friday. And I made my buy watch list, and it's moved up from there. Copart, I talked about this one. Boring little move, okay? Boring little move. I've already closed part of my spread. What I have left on Copart, I did a Scott synthetic, so I bought a long, actually I got it all here still. So Copart hasn't moved much. So what I did on Copart is I bought a 115 call and I sold a 135 call. So 10, 8 minus 2. So I've got $8 in that trade. Well, that's the current price. I had 675 in that trade. Then I sold a 115 put and bought a 332 110 put, which reduced my cost by $1. Let's just say $1.80. So so now I've got $5 in this trade. So $5 times 40 times 100 is $20,000. In 5 days, I've had a 50% return on my trade. I'm up 11,300. And the stock has moved some, but has not moved a lot. Will Scott made my list again this week. This was here on Friday. It had popped and failed on Monday, and it's gone sideways since. Novavax was up 4 point was flat on the week, as was Chemocentrics. This is Cinemark Holdings. It said buyer beware. They have cash issues. Movie theaters, T.G. Watkins stock, recovery play. Big move off the bottom already of 100%. It did nothing on the week. And then the ones that didn't do well, Generac really hasn't done badly. It just did not get above its chandelier stop, which I would have not gotten in. Quidel still can't get out of its own way despite its great earnings per share growth. And Horizon just had some bad news. And actually, 1, 2, 3, 4, 5. Here's the interest period. It must be Friday, Thursday. Friday is when I looked at it and I said you could buy it on Monday, and it was a false breakout. So I like pullbacks in an uptrend. If I look at this week's buy list, pullbacks ready to run. There's a bunch of them. I'll look at these real quick and then say goodbye. Solo is an EV. I would consider this speculative and high risk. It's not sitting on a long base anymore. That was a long base. This is a flag, and I could imagine that it's about to break out of the flag. You'd be a lot safer waiting to take out the chandelier and the PSAR dot, but I know people are going to buy it right away. It's got a person pivot. It's got a mobile breakout. I like it. I'm going to wait till it takes out the chandelier. Here is a IEA infrastructure and energy alternative pullback. Had a mobile breakout on Friday, breaking out above its chandelier stop after a big run up and a pullback. iRobot. Now here's the problem with iRobot. I like this pattern a lot. It's broken above the chandelier. Look at the PMC has gotten better despite a sideways movement in the stock. That's bullish convergence. A new weekly bongo jumping out of a squeeze. What don't I like about this? This thing's gone sideways forever. It's had a lot of starts and stops. So I would keep a manageable stop underneath and not love this stock unless it moves. Ballard Power, I already have some I'm in. It broke out on Friday. Kind of a cup handle and a breakout. We'll see if it goes anywhere. Lennar, a lot of the building stocks look good. On Thursday, it broke above its chandelier stop. Didn't do much on Friday. But remember, Friday was a down day for the market, and it was up. Mobile breakout from a squeeze, new person buy signal, pocket pivots, and a kahuna. I think Lennar, several of the building stocks looked interesting. Axonics is a medical device play. Again, not a perfect looking chart. Did take out its chandelier stop, has a mobile breakout and a kahuna. Catalent, it's in an uptrend. It's pulled back to support. Here was the move starting, and we're picking it up a couple days late. But I like Catalent here. Genmark Diagnostics. So the problem with Genmark and some of the others is they're flat. Okay, they're flat, and I'd rather buy something like this part here that's in an uptrend and pulls back than something it's been flat for so long. That's the negative. The positive had a new person in a pocket pivot and a mobile breakout from a squeeze. It took out the PSAR dot. Let's be why I'm okay to put this in and why do I like these? It's simple. Here's the PSAR dot. You're right below it. So when that flips, if the price moves through it, you have people that follow Wells Wilder that may jump on the stock. The stop, let's see. The closing price was 1404. That 50 is at 1288. So if I put it at 1285 there, and I buy it at 1405, I'm risking $1.20. $1.20 and $1.04. I'm risking about 8 or 9%. I wouldn't put my stop any less than the 50, a nickel below the 50. Keep it tight. I don't think you're going to watch this thing plummet, but you're going to watch. I'm afraid it keeps going sideways. Piedmont Lithium is kind of like the first stock I showed you, Solo. It's in the EV space because it makes batteries. Sideways move. It did have a mobile breakout from a squeeze and a pocket pivot. Taylor Morrison Homes. I probably like this even more than Lennar because of the move on Friday. Uptrend, sideways move, breakout. NetEase I talked about before. Again, it's kind of been going down a little bit and loose, but it broke out above its Chandelier stop, had a pocket pivot, kahuna, and a person buy signal on Friday. I like that. Canary Medical, just too loose, but the pattern is like the others, right? Get above the chandelier. Probably the first stock I'm going to look at buying this week is Restoration Hardware. Earnings are out. It's got good earnings per share growth greater than its multiple. Yeah, it's expensive, but when the earnings per share are better than the multiple, I'm pretty excited. It's under accumulation. I think it looks really good right here. You've got a squeeze, you've got a person buy, and you got a kahuna. If the market goes higher, as I think it will, I think Restoration Hardware goes with it. Corvo, big uptrend, pullback, try to take advantage of that pullback. iClick is an internet media stock. Again, it's kind of down off the highs and it's kind of loose, but mobile breakout from a squeeze took through the chandelier in a person buy, kahuna, and a positive convergence on the market catcher. Polaris, this and Brunswick looked interesting. They both are in the leisure products group. Get above the chandelier. It's been in a squeeze for a while. I think this looks very interesting here, especially if it can get above. Look at the earnings per share growth. I like Polaris. I put a buy stop, a nickel above that chandelier stop, and I'd probably put my sell stop below the low of these 2 days. Give it a little bit of room. I think Polaris we'll be talking about as a win next week. Adobe, I already mentioned to you before. ELF is another one. Uptrend sideways, mobile breakup from a squeeze, person buy signal, pocket pivot, multiple kahunas in a row. ELF looks really good for a short-term buy. And then I had a couple of cement players. Here's Vulcan. Don't know Janif Holdings for not. I don't know what they do. Ignore this one. It may do fine, but it's in too much of a downtrend. But it took out its 50. That's why it made it to my list. GDS Holdings and IT hasn't done much for a while, and it broke out on Friday above its chandelier stop with a mobile breakup from a squeeze, pocket pivot, and kahuna, and in a person buy. And although I'll compare UPS and FedEx, and I don't know why they should look so different. UPS, sideways move, breaking out here, mobile breakup from a squeeze, person buy, pocket pivots, kahunas. And I'm just going to stop here and look at FedEx. Totally different looking chart. Broke down below the 50 here. Now, if it gets back above it, I'll reevaluate. I love the earnings per share growth, but that is a bothersome day. You've got a new weekly bongo, mobile breakdown in a squeeze. You broke down here. You flipped your chandelier from a buy to a sell. You have person signal down, pocket pivot down, and kahuna down. May turn out to be okay, but short-term weak. So that's my list. All these are entered into TradeStation and Thinkorswim. I'll probably put a couple potential buys in. That's the ones I said I was going to buy. If we look at the industry groups over here, you can see we've got a lot of renewable energy, recreational vehicles, home builders, a lot of different things. Lastly, I made a comment a couple of weeks ago about Moderna. That's the one short I've got right now. And I actually bought a call when it took its dive, so I'll actually make money if it goes up until my short point. The problem I have with Moderna, and this charts, yeah, it's a beautiful stock. As I pointed out to you, its market cap, it's down to 55 billion. It was even higher last time we looked. That is a joke, folks, a joke. 54 billion. They're going to have 11 billion in sales of vaccine next year. Then they're going to go to zero once we don't need the vaccine anymore. Or they're going to go to 3 or 4 billion. A multiple of revenue times 5 is high. When that revenue is going down, it's ridiculous. Let's look at Alexion, which just got bought this week or is being bought. 34 billion. A company that's been on the market with marketable drugs, blockbusters. Which one's worth more money? You got my bet for Alexion. You all have a great week and safe travels. And I'll be announcing a live meeting soon. I haven't decided when I'm going to do it. A live webinar, not live education. Take care, everybody. Goodbye.